Hello, chart watchers and Decision Point faithful. Welcome to this Monday, October 28th, 2019 edition of Decision Point with your hosts, Carl and Erin Swenlin. Hey, I wanted to just say a shout out to all of you first timers today. And for our DP faithful out there, welcome back to the show. All right. Pretty interesting day, Dad, I have to say, with the market making new all-time highs. What do you make of it?
Yeah, well, I'm still skeptical, and we've got a chart bar there that looks a little suspicious, but it's not horrible. I have to say that.
Yeah, I have to say I'm a skeptic too, but I don't think anybody, any of our DP faithful would be surprised to hear that. We
Right.
tend to be a little bit more skeptical and really try to see all the signs that are out there that are pointing to the right information and really to give us a good feel for the market. So we're going to have an agenda here today of I'll be going over the broad markets and the DP scoreboard indexes, the review for that, as well as our sector scoreboard. I'll be going over the decision point indicators. We do have a few really interesting formations and information. So you'll want to definitely stick around for that. And then I thought I would show everybody how I find Decision Point Daily Diamonds. If you haven't read the DP Daily Diamonds report from the Decision Point blog, I'll introduce you to that and I'll give you an idea of how I go about finding those diamonds in the rough. And then we have, we also have the bonus, of course, and that is where Carl comes in with his grab bag. Always some interesting charts that have been floating around his brain that he likes to share with us. So it'll be interesting to see what you have today. All right, so let's get started with the Decision Point scoreboards. And of course, you can find each individual scoreboard on the homepage for StockCharts.com. You'll just select in one of your tiles DP signals, and there you'll go. You'll have them for you. Right now, we did not get any changes last week. And the only thing I saw of possible change would be some of these weekly PMO signals. The weekly PMOs have turned up, and I know at least on the NASDAQ, I think possibly on the S&P 100, we're seeing positive crossovers, but of course those don't go final until after the close on Friday. So you can keep an eye on it, but we do not change those signals in the midterm for the PMO until those weekly charts do go final. And still on the monthly charts, those monthly PMOs are still in decline. I think the NASDAQ, I looked at that chart and I think it is turning up on the monthly chart, but there's still a lot of margin to cover before we see those signals change. As far as the Decision Point sector scoreboard, it's looking pretty healthy here with all buy signals. Intermediate term trend model buy means the 20 is above the 50-day EMA. Long-term trend model buy means the 50-day EMA is above the 200-day EMA. And as you can see, energy is the lagging sector at this point. I'm trying to remember the last time I saw green buy signals next to XLE on our scoreboard. I believe it's been quite a while. All right, well, let's go ahead and we'll look at a few charts. And I am going to take you right on in. The first chart I wanted to show you was our Silver Cross index and our Golden Cross index. And these measure the Silver Cross, that measures how many of the S&P 500 large cap components have their 20 above their 50-day EMAs, meaning they are an intermediate term trend model buy signals. And then the Golden Cross, of course, is going to tell you it's going to tell you how many of the S&P 500 large caps are showing a buy signal with a 50 above their 200s. And what I really wanted to point out today is the fact that you can see on this chart, you've got the breakout that we got. And yet, if you look over at the Silver Cross Index, you can see that we only have, we have those turning down. So basically what that is telling you is that we got an all-time high today, nice gap up breakout, yet we lost some of those 20, 50-day EMA positive crossovers. So that always makes me suspect of a rally. If I start seeing less participation on a breakout, we've already been watching the fact that we've had these price rises and we're not getting the kind of information we want as far as breadth goes. We're just not seeing that support. I mean, think about it this way, guys. We're at 60.8% have their 20s above the 50s. So not even 2/3 of the S&P 500 have their 20s above the 50. Yet we have continued to make new price highs, and today, of course, making that all-time high. Let's go ahead and look at the relative chart and see what our various indexes are doing in comparison to the S&P 500. I found it interesting to see the Dow has really been underperforming the S&P 500. And I say that because when I run my diamond scans, I've really been catching a lot of industrials coming up on those scans. So interesting to see it not performing quite as well and really sitting on relative lows for the entire year. The NASDAQ 100 has turned itself back up and is almost ready to make a new relative high in comparison to the S&P 500. And you can see large caps doing pretty well. And I think it's encouraging. The S&P 400 and S&P 600 are starting to perform slightly better than the S&P 500 as well. So this is what we want to see, are those mid and small caps starting to participate, maybe helping the...
Erin?
Yes?
On the industrials dropping off, that's the Dow Industrials, the Dow 30.
Right.
I doubt that, well, I don't think that all of them fall in the category.
That's true.
In the broad category of industrials. So you may have the industrial sectors showing better in your scans, but it doesn't really. We probably shouldn't think of the Dow Industrials as
the industrial sector.
Not a lot of smokestacks there anymore.
Right. Okay. Yes, very good point. Broad market indexes in general, how they're doing, again, S&P 400, 600, well off their all-time highs, especially the S&P 600. Yet we're getting new all-time highs now out of, the equal weight, we did see an all-time high, but look at that. If I had this on a candlestick, that would be a shooting star, no
Absolutely.
doubt. No doubt about it. Those are bearish candlestick formations, and candlestick formations usually are good for about a day. So what it is telling us is that we should expect lower prices tomorrow off of this rather than a continuation.
The 400 has a candlestick, shooting star too.
Absolutely. Okay. Let's look at the global markets just really quickly. The one thing I would point out on this chart are a few breakouts that we're starting to see out of the declining trends of the bear markets that we had in the German DAX. UK, you can see, is finally starting to break out. French market didn't make an all-time high today, but certainly continuing to butt up against all-time highs. And then we have the Nikkei, which did bounce off of that declining tops trend line and is now higher than that previous top we saw back in 2019, about April. This is telling me now, of course, that we're getting, this is the high for the year right now on the Nikkei. And you've got India Nifty 50. It's really struggling with that declining tops trend line. And of course, Shanghai still in a bear market trend. All right, let's get down to business here and look at the S&P 500. And one of the things I did point out on our show last week was the possibility for all those bulls out there that we could be looking at an ascending triangle. And those are bullish formations. The expectation would be a breakout. I'll have to see more continuation here. It's really not what we call a decisive breakout. You really want to see that 2 to 3% move to the upside on a pattern being executed. And although the OBV has really started to make a move here, you can see that if you look at the volume bars themselves on the S&P 500, that we have been lower on the volume the last 2 days, and we had 3 really great rallies, and yet we're seeing less and less in the way of volume.
That would show better with a 250-day EMA.
Yeah.
on the
I
volume.
thought I fixed that.
You have to save it.
Ah, we were talking about it before the show. I updated it and then didn't hit the save button. And there you go. By the way, all of these are in this DecisionPoint live chart list. You just go to the DecisionPoint blog and the link is right there at the top. So when you see the 250-day EMA, this really will point out those climactic days. And as you can see, throughout this entire rally to the upside, we've just not seen that kind of volume above that average, which is what you would want to see and expect when you come out of a low and you're starting up on these rallies. You want to see these big bars.
Well, there's like the really high spikes. They're probably quadruple witching option expiration days.
Right, the big tall ones here.
Right.
But yeah, watching to see what happens above that 250-day EMA of volume is really, I think that really points it out. So I'm glad that we have updated that on our charts. The weekly chart for the S&P, this is what I was telling you about. We do have a crossover of the weekly PMO above its signal line, but it wasn't that way on Friday. So there is no signal change just yet. We are still on that sell signal on the weekly chart that came in on September 27th. We'll keep an eye on it, of course, if we continue to see prices rally a bit higher. I would expect to see that signal stay intact, and then we'll make that change on Friday. All right, short-term indicators are ultra short-term indicators, and these we look for climactic activity. And one of the major things that you can see on this chart, despite having this oscillation above the moving average, which is considered positive and generally means you're in a have some internal strength as far as the market is concerned, there are some red flags. And the first of which, I noticed that our breadth, the net advanced declines, notice they're really not at all climactic at all today, with a new all-time high being hit. And even the new highs, the S&P 500 new highs, we still are not looking, they're below some of the spikes that we'd seen previously, the climactic activity. And you would expect when you see that all-time high hit that you would have accompanied new highs on the index, and we don't have that. And this also is the SPY up here, and there is another what we were talking about, those shooting stars, those bearish candlestick formations, and that is one. Short-term indicators, real problem for me here, in that notice, despite this fairly strong rally to the upside after we got that gap up, we are seeing a decline on these oscillators. So that is a negative divergence, and I think a very powerful one when you look at the steepness of the declining tops trend line here on those indicators, and then looking at those rising tops on price. That really is suspect. Certainly has me a little bit concerned about these all-time highs being held at this level. Now, the intermediate term trend model indicators are still looking pretty good on their way up. Not really any hesitation. I suppose you could say there was a little bit of deceleration here if you look in the thumbnail, but overall, they're still rising strongly, and they are in what I would call neutral territory, so they're not overbought. All right. And now I'm going to show you really quickly here. Oh, we looked at that earlier. So if you go to the articles tab and you click on the DecisionPoint blog, you'll see the weekly wrap, which Carl does on Friday, a must read every week. And then you'll notice that we have these new DecisionPoint Daily Diamonds reports. And I'm getting a lot of positive feedback on these. If you haven't checked them out, I highly recommend you do. Basically, what I do is run some of my scans, and I narrow them down for you down to 5 stocks. And I give you my reasoning as to why I picked them to show you, and the expectations I have. Obviously, these aren't, solid winners every time. I'm doing this more as a teachable moment for all of you, so that when you're looking for your price charts and you're looking to see what is the best thing, what are the characteristics I should be looking for, I point that out for you. So highly recommend you do this. And really the main way I find these is I just run one of my scans and I look at what kind of action I'm getting off of those. So let's just see really quickly so I can show you what I do. So I run the scan, and in this case, for this particular scan, there are 104 matching results. Well, that's a lot if you look at that. But I use my own technique on how to narrow it down to 5. And the main part, I'm just going to show you the first part of it, is I move all of these into a chart list. And then I just use the candle glance. And I've set mine up for a 6-month chart, and it has my PMO on it. It has the 20 and 50-day EMAs, and it gives me a pretty good look as to, the performance of that stock, whether it is breaking out, what kind of chart patterns may be forming here. And, I just go through and I click them if I don't like them and just keep going until I come down to about usually about 10. And then I look at weekly charts and see which ones have the best weekly charts. So that's pretty much how I'm doing it. I highly recommend you go ahead and check it out. And I'm going to go ahead and pass it to you. And hopefully you guys will go out and check out these diamond reports. I'll be writing one after the show. So it should be up by, I'm thinking 8 p.m. Eastern or earlier.
Okay, here we go.
Yes. What is on your mind today?
Right, I think I'm going to start out with a stock that may be of interest to people. We've been having a lot of wildfires out here in California, and one of the things that has been happening is that electric utilities have been shutting off power to avoid power lines falling down and starting more fires. You can get this because of high winds, and it can cause problems. What I really noticed, though, we've been here, well, in this house, we've been almost 50 years. And in the good old days, this kind of stuff didn't happen. I don't
remember a lot of wildfires.
We had wildfires, but they didn't shut off the electricity. And the way it would get shut off would be it got burned out in some way, and it couldn't, but they endeavored to keep it on. But it's just one of those kind of societal deteriorations that has occurred out here, whereas. Of course, they're bringing lawsuits against the companies because of the fires, and there probably is some neglect there. But it just seems that it's a problem, and I haven't any quick answer for it. But there is one thing that people can do, and we did here several years ago. Is get an emergency generator, and the company that makes them has the biggest share of the market in these generators is Generac Holdings. That's the brand of our emergency generator here, and they notice they've been seeing quite a bit of interest here in the last this month particularly, but. They've been. I think that was about from here to here is like 90% roughly. Mm-hmm. One of the things that I wanted something also to look at is the weekly chart, and man, is that just taking off. And then here, from here, I don't know what it is, but look, I can inspect.
There you go.
Yeah, 255% since 2016, and here it's okay. It's over 100% from this low here, and it's starting to move vertically. Now, I don't like vertical moves, but sometimes they can go a lot farther than you think, and there certainly is going to be market pressure behind this kind of a move until the rains come.
Yeah.
You know, and then we won't have the wildfire problems. But it's an interesting stock to look at. No, not a recommendation by any means, but just something to pull out of the air if it fits what's going on around here. You know, we've had the generator here for several years, and we've only had it tested in real time or in a real event one time, and it was a minor power outage, but the generator did not come online. And as it turns out, we had the gas company decided they needed to change our meter, and the meter they put in was a low capacity meter, so it couldn't feed the natural gas to the emergency generator, and so the generator wouldn't start. Fortunately, we got that fixed, but that's something that people don't realize too. The best generator you could get would be one, certainly for our application here, would be one that runs off of natural gas. If you have to keep gasoline around for a generator, that gets to be a problem because gasoline has a relatively short shelf life.
Mm-hmm.
Okay, enough of my. I wanted to take a look at. So we still have the possibility of a triple top, and again, this volume. I'm not crazy about this at all. That's just not enough. It had been too high, then I would have been thinking blow off. But this shooting star, I'm still not convinced that we're headed significantly higher.
Right.
One of the things we got today was a neutral signal on TLT on bonds. The 20 EMA crossed down through the 50 EMA. Since they are both above the 200 EMA, that goes from buy to neutral. And it's been a while. So it's been since December last year that it's been on a buy signal. I don't anticipate a large decline on bonds unless something happens that I haven't anticipated. But there's I think a 90% chance that the Fed will lower interest rates tomorrow. Don't give anybody a heart attack. Not tomorrow, Wednesday. And so that's going to keep pressure to keep the bond price higher. Looking at the weekly, this is the previous all-time high, and we're coming back towards that. It appears somewhere in here we're going to find support, I believe. On the yield array, we've got a double bottom, and I don't know what's going to happen here tomorrow or on Wednesday, but we assume it's going to tick down a little bit anyway. This chart, I tell you, I can't stop looking at it. I know a lot of people must think, what is he seeing? I don't get it. I'm tired of seeing it, but it just, to me, it's just telling us how close to really bad stuff we are when you've got this close to zero on interest rates. They go below zero. That's a completely unrealistic world then. So I'm completely against these lower interest rates. I don't get them. It's not rational.
Mm-hmm.
We lowered them back here to help the real estate recover, and it's recovered, and it's beyond belief again. And you've seen the news on interest rates out here, and the cost of real estate is back up. It's actually well above previous highs in 2006. Anyway, we've looked at this. I also like to keep the percent of stocks above the 20 EMA. I like to this is a background for a lot of different chart displays, but essentially we can see where this is a real concrete indication. Stocks above their 20 EMA, it's pretty short term, but when you see prices going higher and
less
the
participation.
actual prices on individual stocks actually moving lower within the index. And right now, look at here. Did you show this before? I don't recall.
I didn't show the percent above 20.
Yeah. So look here, we're at new all-time highs, and this is like about 20% below this previous top. So that's not a healthy situation. It still hasn't updated for today. I'm going to try to get that changed when Bob gets back, but it's not going to change significantly today. I can assure you.
Mm-hmm.
We're getting towards the end aren't we?
Yes, we are. We have about a minute and a half.
Okay, well, let's look at one of the stocks that's in the news is Beyond Meat. And I looked at this the other day. Of course, you had this huge advance because it's a darling stock. But then I noticed, it's coming back, and then it's dropping off here or drooping down. Didn't look really healthy. Today apparently had a nice pop for some reason or another, but that was really quite a decline, I thought, considering this is one of those feel-good stocks
that are beyond me.
Right. Okay, well, I think I have just about covered my ground for the day. So
All right.
That's it, back to you.
All right, well, let's go ahead. I'm going to move the screen back here for a moment. All right, so you can find some of those charts. I know that some of those 20, 50, whichever ones you're looking for, the breadth charts. We have chart packs that you can download if you're a extra member, and we do have some of the breadth charts right in those chart packs. So I did want to mention that. All right, well, thank you all for joining us today. If you could fill out that survey, we'd really appreciate it. And we hope you'll join us again next Monday at 5 p.m. Eastern.
Hi, I'm Arthur Hill.
And I'm Julius de Kampenaar.
And you're watching SCC TV.